Tonight we're going to be going over a topic of discussion that I've been asked about for a long time. Reed, can you put together a PowerPoint presentation on understanding loan documents? Because over the past few years, you have new documents now and new terms that many are unfamiliar with. For example, the CD, or closing disclosure. What is the CD? Okay, it just replaced the HUD-1 closing statement. Many of you that have bought property over the past 10, 15 years, you're used to receiving a HUD-1 closing statement, not a CD. So we're going to be going over terms like the LE, the CD, and we've got a great presentation for you guys tonight. Okay. One other thing that I do want to touch on, though, you guys, as Kristen said, I am federally and state licensed to lend in California, Texas, and Arizona, and my branch is licensed in Florida, Indiana, and Tennessee. And another thing to add, I've personally financed now over 1,000 transactions with Marshall Reddick since 2004. So overview of tonight's presentation, we're going to be going over the 1003 application. We're going to be going over the loan estimate, okay? We're going to be going over the closing disclosure and then the final closing documents, okay? Now you guys, the 1003 application, okay, this is what this loan structure is built on. Okay, the LE, this is what all the standard fees are, okay? We're going to be going over what the norm of those fees are. We're going to be going over the high end of these costs and the low end of these costs and what to expect, okay? Everybody from the cheapest lender out there to the most expensive, okay? We're going to be going over definitions of common industry terms, okay, that a first-timer would not be familiar with. We're also going to be going over how impounds work. Okay, what are impounds? Okay, we're going to be going over what are the typical title and escrow fees. Okay, what can be considered high and what can be considered low costs. Okay, we're also going to be going over what are the typical additional settlement charges. Okay, what's a survey, pest inspection, HOA dues. Okay, we're going to also be going over the final closing documents. Okay, so bear with me. Going to be on here for about another 45 minutes. And we're going to try and stop midway through to do a poll. So if you guys have any questions, I can answer those while we're on the call. Now, first step is demystifying the 1003 application. Any purchase that you do of residential real estate that's 1 to 4 unit in any state is going to have a uniform residential loan application that looks just like this. Okay, it's 4 pages long. Now, what does RESPA require? Okay, for your loan to be considered an application. RESPA is the Real Estate Settlement Procedures Act, okay? It's who basically governs all of this. They require 6 things: a name, your income, your social, a property address for the property that you're going to be buying, the estimated value, and the loan amount. Once you have those 6 required fields, your loan is considered to be an application and your loan file can officially be disclosed. Now, what is AmeriFirst request? Everything pleased. Okay, the 1003 is the backbone of the transaction. It's 4 pages long, and we ask that you fill out everything. Let me give you a quick little example. If you're making more money now, okay, than you were making in 2014 and 15, but you don't specify that on the application, you just think, oh, I sent them my tax returns. Well, we may be pre-approving you with less income than you can actually qualify. So you may be able to qualify for more. Okay, it's very important. That's just a simple example of why it's so important, okay, to fill out a complete 1003. Now, what I thought would be the easiest way to go over this tonight is to base this on a $200,000 investment property purchase, okay? So we're going to assume that this is a very seamless transaction, $200,000 home that's maybe built in 2006, right? Going to probably have a pretty clean home inspection, clean appraisal, and I'm going to go through the process, okay? So we're going to start off, you're going to complete a 1003 application. You're then going to provide the documentation to support the income, assets, and the credit needed to qualify for the sales price range that you're shopping in, okay? So W-2s, pay stubs, bank statements for your funds to close, okay? You're then going to sign a few preliminary loan disclosures, okay? The 4506T document, okay? That is the tax transcript document that we have you fill out that we then submit to the IRS, and then the IRS gives us a copy of the tax transcript showing the way that you filed your tax returns for the past 3 years. We then take the tax transcripts, we place it next to a copy of your tax returns that you give it to us, and that way the underwriter can review both sets for accuracy. Okay? We also have you sign a borrower's authorization. That's going to allow us to order your verification of employment from your employer. So my assistant at this point will also be asking you for your HR contact information, or if you have to order it through the work number. But at this point, getting the verification of employment on file is going to save us 3 days on the process. So is getting the tax return results. We're also going to order your Social Security verification form. Now, when we have those documents in, we're then going to send your loan to my underwriter here at the branch, okay, for a preliminary underwrite to review your file. Some of you may be W-2, you make $500,000 a year, you own one property, it's a bread and butter file, okay? A file like that, anybody can pre-approve that, but we still put it through underwriting just in case. The review process is very quick. It can generally be same day if it's a simple file like that. If you've got 7 or 8 rental properties and it's a very, very hard file to structure, this process from start to finish can take about a week. Once you've gotten pre-approved, right, I send you off a copy of your pre-approval letter. We're going to send you monthly payment information and some options for either putting 20% or 25% down. Because any of you that are investors, you know that if you put an extra 5% down, you're always going to get a little bit better rate. Okay? Send you off the pre-approval letter. Now what's next? You're going to contract on a property. The pre-approval is good for 120 days now. Fannie Mae recently increased the length that they'll allow a credit report from 90 days to 120. So once you're pre-approved, you're good for 120 days. Assuming that you find a good property, we're going to contract on that property. First step, your agent and you are going to order your home inspection. The lender is then going to order the appraisal. At this point, the lenders also, okay, prior to ordering the appraisal, we have to disclose your loan terms officially. So now that we have a property address because of the contract, we're going to request preliminary loan disclosures from our compliance department. But before we request the preliminary loan disclosures, we always request what's called the fee sheet from escrow. That used to be a copy of the estimated HUD closing statement, but now we have them send us a simplified fee sheet. When we receive the fee sheet from escrow, it's going to have all the third-party costs in the transaction, the title fees, the escrow fees. It's also going to show if there's any credits, you know, if the seller is crediting any closing costs, or it's going to have all those things on there. Once we have the fee sheet, the lender, us, is going to generate what's called the LE, or the loan estimate, which was basically replacing the good faith estimate, okay? Once all third-party costs have been verified from the fee sheet and preliminary loan disclosures are sent to the borrower for initial document signing, once that's been done, then we can order the appraisal, okay? Now remember, you guys, the seller always selects the third-party title and escrow company on a purchase transaction, and we don't have any control over the costs. This is a sample of your loan estimate and what it's going to look like when it goes out to you. Far left-hand corner, you guys, you're going to have your sales price, you're going to have your loan amount, interest rate, monthly principal and interest payment. Now, a couple things that I want to note on here, okay? It's always going to project the monthly payment, including monthly property taxes and an estimate for monthly homeowners insurance. Now, even if you don't want to impound your taxes and insurance, so I'll explain now what impounds is. Impounds is if you would like to pay a monthly portion of your property taxes and a monthly portion of your homeowner's insurance with your monthly principal and interest payment each month. It's basically a forced savings account. For investors that have 7 or 8 properties, or even 2 or 3, it's a good way to stay organized. And separate from that, you're not having to deposit as much money at closing to set up the escrow account when you're buying only a $200,000 home, as opposed to buying maybe $1 million home out here in California. So it's not like you're locking away a lot of money. It's maybe only $2,000 or $3,000 that you would submit to the lender through closing to set up your impound account, so you have a buffer in there. And again, some people like to do that. If you don't want to do it, there's no change in rate for that. But either way, on the page 1 of the LE, even if you're like Reed, we don't want to impound, Just know it's always going to include the total monthly payment. Now, why do they do that? RESPA wants you to be fully aware of what your monthly debt obligations are going to be. Now, at Marshall Reddick, we're very good about making sure you know, look, you're going to have vacancy. You know, you're going to have maintenance. It does happen when you buy investment property. You may have property management fees because you really need to get a property manager, especially when you're out of state, to manage your property for you. There's many other costs that will go into holding an investment property. But again, RESPA is not going to include those things. They're only going to include what they need you to be fully aware of, which is your actual debt obligations, that if you don't pay them, basically, you would be in jeopardy of losing your property. You don't pay your property taxes, they can put a tax lien on the home. So again, you guys, those are the most important things for you to see on page 1. And the last little thing I also want to know, you guys, if you look on the upper right-hand corner, you'll see that it will list if your loan has been locked. You know, for any of you that want to test your loan officer, a lot of people out there, you know, will tell you that you're locked before you're not. And this is a good way to tell if someone's telling you the truth, because 100%, if the rate has been locked, it will be checkmarked on the upper right-hand corner of page 1. Now, moving on to page 2. This is going to show you a breakdown of all closing costs on the transaction, okay? On the left-hand side, origination charges, right? It's going to have lender fees. Below that, you're going to have escrow and title fees that are generated from the fee sheet, remember, that we received from escrow. So if any of those costs from escrow change throughout the process, that's why when we get to the CD, which is the closing disclosure, the CD is basically just an audited version of the LE. So if anything has changed from the LE to the CD, everything will be updated and audited correctly for your CD at the end of the process. And again, we'll be going over that here in just a little bit later. Now, any seller credits that were not negotiated at the contract stage and included on the fee sheet we received from escrow will be reflected on the last section of this page. So if there's any credits, you guys, this is something that people ask me quite often. They're like, hey, Reed, like I was supposed to be getting some credits, you know, where is it listed? If you look on this document on the far right-hand corner and you look down, you'll see seller credits, you'll see funds for borrower. And one thing I need to notate in here, you guys, if this cash to close figure is never going to include any deposit that you put down when you signed your contract. And that's what else can confuse people. They're like, hey, I just put $10,000 down on the property. Why is it saying that my cash to close is $58,000? It should say $48,000. It's because the LE will not generate it that way. They want you to see a version of exactly what you're paying, and they don't want anything deducted from it. And it's kind of confusing, so just be aware of that. Page 3, this is just additional information about this loan. It gives you a great little comparison, okay, where you guys can basically take a look at, you know, in 5 years, how much principal, interest, mortgage insurance, and loan costs that you will have paid. What this is really for, you guys, is so that you can compare the different costs between different lenders. So if you were to go out and shop me with 2 different people, you'd be able to, at the LE stage, be able to do some comparisons, okay, which we hope that you don't do that, but in the end of the day, there's a dozen lenders out there, and if you need to shop, it's totally fine. And this is a good way that you guys can shop between lenders. Also, the APR is always going to be listed in this section, okay? Now, another important thing to note is that you're going to have other considerations on this page, okay? If this loan is able to be assumed, okay, it's going to state on there that this loan requires homeowner's insurance. It's going to state information about late payments. It's going to state information about refinancing, okay? It's going to state information about your appraisal. So out of all these documents, all 3 of these are very, very important, and you do need to always be reviewing your loan estimate at this stage. Okay. Now, one thing we wanted to do is we wanted to go over the high end and the low end side of all the fees on the transaction. So bear with me. When you get to your loan estimate, Section A is always going to refer to lender origination charges. Now, let's break down the different types of costs charged by the lender, okay? They're not charged by every lender, but these are the different types of costs that you may see. Origination fees, That's any points your lender is charging for the loan. That's not any discount points, okay, that you're charging to get a lower rate. That's any additional fees that the lender is charging to originate the file. Now, most lenders have their compensation built into their interest rate, and for this reason, they don't charge points up front. This is why certain lenders have higher rates and other lenders have lower rates. Processing fees, they should never exceed $995. Underwriting fees, they should never exceed $1,250. Document preparation fees should never exceed $150. Application fee, they should never exceed $150. And if your underwriting and if your processing fees are anywhere near $2,000, you should never have an application fee or a credit report fee. In some cases, you will have a credit report fee. It should never exceed $60. Discount points, that's going to refer to any cost that you are paying to buy down your interest rate. Now, why do you need to know this? Discount points are different from origination points because origination points, like I said, that's the lender charging you extra money he's going to put directly in his pocket. Discount points, bona fide discount points, have a separate section, and they're literally there. You are literally paying that money to get a lower interest rate, where the branch and the loan officer, they're not compensated off of that, okay? So definitely understand the difference there, and discount points is something that you would pay for getting a lower interest rate below what's called the lowest par rate, which is the lowest offer rate before you start paying points that covers the lender's compensation. Now, a summary of this. If you're paying the higher side of the processing and underwriting fees listed above, you should not have a doc prep fee, an application fee, or a credit report fee. The high side of what you should pay, excluding points, would be $2,000. The low side is going to be $995. Appraisal costs and what to expect. I love this section, you guys, because this can be confusing. People go, why is my appraisal $600 for this investment property? It's only $200,000 property. When I bought my home in California for $800, my appraisal was only $450. Can you explain that? So I'm going to go over these costs and the different costs and what the high and the low range is. When you order your investment property appraisal for this $200,000 investment home that we're buying, your cost should be no more than $350 to $500 for the appraisal report. If the property is an investment, you're going to need to get a rental comparable analysis, which is included in the report. The appraiser, it takes them more time to do that. They're going to charge for that. It's on average $150 to $250. If the property is a 2 to 4 unit, it's going to be an additional $50 to $150. And if this is a 4-unit property in California, it might be an extra $400 to $600. Okay? If this is a property that's on the bluff in California, like I just did one for $4.8 million, it was a $1,650 appraisal. So remember, it's all going to be relative to its environment. But in this case, on a $200,000 property, 2 to 4 unit, it's going to be an extra $150 max. Term times that are needed, okay, if this is a rush appraisal, because we're in a position where we're up against an all-cash offer situation where we're going to offer a little bit more, but we're using financing, and we've got to move and literally close in 15 to 20 days, okay, we're going to have to rush order the appraisal. A 24-hour, 48-hour, or standard 5 to 7-day rush turn time, depending on the type, will cost between $100 to $300. If the property is a new build, okay, generally you're going to have to do a reinspection fee. We can wait until the last week when the property's done and then order the appraisal and have them go out there, but builders generally don't like that, and everybody at that point, you're really trying to rush too much together, and if it becomes an issue, I always offer a $450 appraisal credit for each borrower either way. So again, if you're doing a new build, it's best to get the appraisal ahead of time prior to completion and then have a trip inspection fee added and have them go back out to do what's called the final completion report. Now, if there's repairs that are needed that the appraiser notates when they're out at the property, like a broken window or the water heater hasn't been strapped down properly, anything like that, or if there's no carbon monoxide detector, detector out here in California, okay, they will have to go back out there. Okay, and that's going to cost low side $100, high side $200. The average cost for an investment property appraisal should never exceed $650, assuming that no reinspection fee is required, okay? Now, if it's a 2 to 4 unit, it should never exceed $800 on this size purchase price of around $200,000. Now, what types of third-party fees can you expect? This is going to be listed under Section C of the loan estimate. Remember, appraisal costs were listed under Section B, lender costs, Section A. So Section C, third-party costs, title insurance. You're always going to have owner's title insurance, and you're always going to have lender's title insurance. The owner's title policy is going to range between $500 to $2,000 depending on the state. Lender's title policy, same thing. Escrow fee, settlement fee, I mean, I've seen them as low as $175 in Texas. I've seen them as high as $2,500 to $3,000 out in California. So it's very, very wide range, you guys. Document preparation fee, this is generally charged as, in my opinion, it can just be a junk fee because if an attorney is not required to review the documents, then why are you charging a doc prep fee, right? Now, in a state like Texas, it's an attorney state. Document preparation fee is required because an attorney is required to review your documents prior to closing, a third-party attorney company. That is an applicable fee. If it's a property that you're buying in Aliso Viejo, California, and there's a $250 doc prep fee, that's a junk fee. But again, one of the problems here when you're buying a property is your hands are tied if you want the property because the seller's agent and the seller are the ones that are allowed to select the title and escrow company on a purchase transaction, you know? So anyways, courier fees. This is a good fee right here, okay? And this is a justifiable fee. If somebody needs to take your documents to be recorded at the county recorder's office to record the deed of trust, it can cost $50 to $100. Wire fees, $50 to $100. Notary fee. This is always going to be less, you guys. If let's say if you're buying a home in California, it's always going to be less if you go and if you sign at the escrow office. Okay, the average costs are about $150 if you sign in person, and about $200 to $250 if you're signing with a traveling notary. Okay, if you're buying an investment property out of state, we're going to have a notary come to you to sign at your home in the evening or at your place of business, whatever's best for you, and then the notary will sign the documents with you and then overnight the documents back to the escrow company in Texas, okay? So in that situation, the max that you'll pay with most services is about $250. Minimal is going to be around $200 for the traveling notary. Recording fees and transfer taxes. Now this is listed under Section E of the loan estimate. Recording costs. This is the cost for recording the deed of trust with the county. This cost should never exceed $200. I generally never see it exceed $80 to $90, but I have seen it up in the $150 to $200 range. But if you ever see anything above $100, just know that it's probably just depending on the county. Transfer taxes require when property taxes for the current installment have already been paid for by the seller, and you are required to reimburse the seller through closing. So, example, if the seller prepaid the first 6 months of property taxes for the year, but you're moving in and there's still 4 months that they already paid for, okay, that's transfer taxes that are being transferred over to you that you need to pay for through the closing, okay? Now, this is never going to exceed 12 months. Taxes in California are due every 6 months. In some states, I believe that they're due every 12 months. Okay, so depending on this, let's say that you bought the property where they just paid 12 months of taxes up front last month. In that situation, you may be required to pay up to 12 months of basically prepaid taxes through the close of escrow, or not, you know, basically paying for those taxes because the seller has already paid for them. But that's the most that you would ever pay for your transfer taxes. Why are title and escrow fees higher on my purchase than when I refinanced? I get this question all the time, you guys, and here's the simple answer. Okay, why are my title and escrow fees $2,500 on that purchase, but now you're telling me that you can do it on my refinance for a bundled package deal for $800? The simple answer, they know you have to go with them if you want the property, so they don't need to offer a reduced cost structure to earn your business. That's the answer. Prepaid items and what to expect. Now this is listed on the LE under section F. It's a prepaid item, right? Things that you have to prepay throughout the transaction, okay? Including homeowners insurance premium. On a purchase transaction, you always have to prepay the first year of homeowners insurance up front. You're also going to have prepaid interest on the new loan, and that's going to range 1 day to 30 days. Now let me explain that. If you're closing your transaction on June 25th of this month, you would need to prepay interest from June 25th to the end of the month on a daily basis, right? So that's what you would pay at the close of escrow, June 25th to the end of the month. And then interest would need to accrue for each day in July, and then your first payment is due on August 1st for July interest. So you guys see how technically you're skipping a payment there, okay? So when you buy an investment property and when you close, let's say halfway in a month, you're going to prepay interest to the close of the loan to get you through the end of the month, and then your first payment's not due until the first of the following month. So that's one of the charges that's included under Section F is prepaid interest. And remember, it'll be any day between 1 and 30 days. Additional other settlement charges, okay, this is going to be listed on Section H of the loan estimate. Home inspection. Mandatory. Always got to get a home inspection. And you should order your home inspection immediately after you open escrow, and don't let your lender order the appraisal until you've reviewed your home inspection and make sure that the property looks good and that you want to move forward, because you don't want to waste that $650 on your investment property appraisal if you get back your home and the property just looks terrible underneath the underneath the skirt. You don't want to have that problem. Okay, so when you're buying a primary home in California and it's in great condition, and a lot of times if that's the case, the sellers will already have a copy of the home inspection, so at least you can order your appraisal quickly because you might have to move fast. But again, whenever you're buying investment property especially, and whenever you're buying it out of state, you always want to get your home inspection first before ordering the appraisal. Now, a pest inspection will also be listed on here, okay, if you want to get a termite. The survey, okay, the survey is how we determine the boundaries of the land that you're buying, okay? So if there's no survey that's ever been done on the property, it's going to be required. Most of the time, there's always a survey available for the appraiser, to obtain. But again, if it's not available, we'll have to order it. The most I've ever seen surveys are between $200 to $500, okay? Mold inspections, anywhere between $150 to $300. Here in California, might be a little bit higher. Roof certifications, okay? Never above $200, okay? Now, what's something that would notate a roof certification being needed? If the appraiser notes anything that's wrong with the roof, missing tiles, anything like that. Any other costs on the transaction that don't fall into the other field sections are always going to be listed in Section H. Escrow payment information due at closing. Now, like I was talking about earlier with the impounds, okay? If you guys want to set up an impound account, this is always going to be all the cash to close that's needed to set up the impound is going to be under Section G of the loan estimate. Now, this section will list how many months for property taxes and insurance are required to be deposited with the lender at closing. Now, this will never exceed 8 months, okay, because we need 6 full months up front, okay, plus we need about a 2-month buffer. And depending on the time of the year that it's in, sometimes it's as low as 4 months, okay? We've even seen as low as 2, if, for example, the taxes were just paid, okay? Now, just be prepared, though, to come in with no more than 8 months. Any homeowners insurance dues that the seller prepaid for will need to be paid for by the buyer at closing and listed in this section. Now, when I say homeowners insurance, I actually mean homeowners association dues. So not homeowners insurance dues. That's a typo. Homeowners association dues. Okay, so if there's an HOA on the property, it's the same exact thing as the prepaid taxes that we were talking about earlier also, where if they've prepaid for 15 days of the month in advance, then that's going to be a prepaid cost. Okay, we're going to take a quick little break to discuss some industry terms, you guys. Some of this stuff many of you already know, and a few of them I'm hoping that they'll be new for you. So points, always just going to refer to 1% of your loan amount, okay? Impounds means paying your property taxes and homeowner's insurance with your monthly payment each month. Now, the lender's going to make these payments for you whenever they're due. Amortization is the term your loan is due in. Prepayment penalty, any cost that you're going to pay for an early payoff of your loan. And then prepaid interest, I already went over that, you guys. Just any amount of days that are left in the month. So again, if you close June 15th, any days that are left to get you through to the end of June, they would need to be paid through the close of escrow. Now, back to our steps in the process, okay? So we've reviewed our loan estimate, okay? We've e-signed all of our preliminary loan disclosures, okay? We've ordered the appraisal to the third-party management company, okay? We're waiting to get the appraisal. Appraisal comes in, okay? Any appraisal corrections or repairs that are needed are going to be relayed to all parties. The lender is going to receive the title commitment showing that no liens or encumbrances are on the property, okay, that are not going to be paid off at closing. So what we're doing now is we're getting all these third-party things in, okay, that we're going to add into our loan file so we can submit for our final underwritten approval, okay? At this point, interest rate has got to be locked. So any of you that were floating the market in hopes of rates getting better, at this point, we've got to lock our interest rate before we submit for our final approval, okay? Any seller credits that have been added due to home inspection results, okay, must be finalized at this stage. So remember, the loan estimate was the estimate of how we started the transaction, right? But now at this point, if the appraisals come back low and we need to negotiate a different price, meet in the middle, or if there's any repairs that need to be done because the home inspection came back with some stuff that needs to be fixed, and now the seller is willing to give a $5,000 credit, okay, we drop a new addendum. Escrow needs to get that information. We need to get that information. This is the step of the process where real estate agent, lender, and buyer, okay, and with Marshall Reddick, real estate advisor also, all work together at this stage to get all of the costs in line so that we can prepare for the final audit of our closing disclosure. So we get all this information, and then the loan is submitted for final underwriting approval once all cash to close figures have been fully verified. Loan approval takes about 24 hours, comes out of underwriting. We then receive it. My loan processor is going to break down the different conditions that are needed between borrower conditions, if updated pay stubs, or anything that was found by my underwriter that was not originally found at the pre-approval stage. Any conditions needed from the agents, maybe an addendum, anything that's needed from escrow and title, so that we can prepare the loan for resubmission for final underwriting. Now, at this stage is when the closing disclosure is audited through compliance and is sent to the borrower to acknowledge and sign. Now, again, what is the closing disclosure, you guys, okay? It is the disclosure is an audited version of your loan estimate after all fees and credits have been verified through the loan process. The closing disclosure process. Now, the lender performs a final audit of all fees and credits. The lender then emails the closing disclosure to the borrower. The borrower confirms receipt of the closing disclosure and e-signs it for that day. Once the borrower e-signs, the 3-day waiting period begins. And then the borrower is eligible to sign their final closing document on the 4th day after the CD was issued, acknowledged, and e-signed. So, example, I mean, if we email this out to you and you e-sign it for the same day that we email it to you, that's going to count as day 1. So let's say Monday of this week, the CD was sent to you. You guys e-signed on Monday. Tuesday, Wednesday, you can then sign on Thursday. Now, you guys, before I go over the sample of the CD, I want to point this out. Retail banks do not authorize, most retail banks will not allow the closing disclosure to be emailed to the borrower. They make it mandatory that you mail, okay, the CD to the borrower. Now, what that does to the process, it adds an additional 3 days on the process, because the lender, okay, when they mail it out, so let's say that you don't consent to receiving this via email, then the lender is going to have to, by law, they're going to have to mail out the closing disclosure, and they're going to add an additional 3-day period on the process, okay, and they're going to start the 3-day waiting period for you 3 days after the CD was postmarked. So basically, what we can have done if we email you the closing disclosure, we can have it done in 3 days to have you sign on the 4th day. If they mail it to you, you're not going to sign until the 7th day. So very, very important stuff. This is a sample of the closing disclosure. I mean, looks very, very much like the LEU, guys. A couple differences, though. On the upper right-hand corner, it's going to state this form is a statement of final loan terms and closing costs. Compare this document with your loan estimate so that you can verify any differences. It's going to have everything though on here, you guys, that basically if anything has changed, everything should be final though at the CD stage, okay? Now, page 3 of the closing disclosure is always going to list any cost differences between your initial loan estimate and the closing disclosure. So it's not like they go, oh, hey, here's your closing disclosure. Now go find your LE and then look over it with the fine-tooth comb so you can see any differences. No, they've sectionalized this, okay? So on page 3, you literally can go, oh, here was my original LE, here's my CD, and here's the differences. And they've actually gone on ahead and made a separate little section for that. Now, if you do not consent to the e-signing process, a closing disclosure will be mailed and the process will be delayed 3 additional days. I already covered that. And then I want to go over this again. All costs and figures should be 100% accurate on the closing disclosure unless the lender was unaware of a credit or an inspection that was completed throughout the loan process, okay? Or if any other cost credits are discovered after the CD has been issued, a new CD must be issued and 3-day waiting period must start again. Okay, this is why it's so important that, oh, well, you know what? We're still upset about that home inspection that we didn't get that extra $600, and the CD's already gone out, we've already e-signed it, but we're still having our agent go back and forth with them, and now they're going to agree to give us $600, and now we want $600. Okay, well, the problem is we've already audited the CD and already sent it out to you, and you've already signed it, and the waiting period has already started. So if you want to add on that credit, it's going to delay the process, which is totally fine. But again, this is how the government has made our process now, okay, where when that CD goes out, we really need to have everything at that point, you guys, so that it's a smooth sailing transaction all the way to the finish line. Final stages in the process. The loan will be resubmitted for the clear to close during the closing disclosure waiting process. So what we do at my branch, the date that we get your final approval, as long as all the conditions look good and as long as we have all the seller credits, buyer credits, and all of those costs that I just discussed all in line so we can submit for the audit of our CD, we will submit for the audit the day that we get our final approval, okay, so that we can get our closing disclosure going. And then while we're in the process of waiting for the CD period to season so that you can sign, we're already submitting your loan on the back end for the clear to close, okay, meaning that we've gotten all the extra conditions that were needed, okay, that I talked about earlier, so that we have a full file so that my underwriter can sign everything and the loan to be moved to the closing process, okay, for docs to be drawn. So at this point, the loan is clear to close. Loan documents are issued and sent to the closing agent so the signing can be scheduled for the day after the CD wait. Notary, escrow will contact you to set up the final signing, okay? Final documents are signed, all funds to close are wired to escrow, and the loan will fund once we receive the final closing documents from the closing company, okay? Loan will record same day as funding or the following day, depending on the county. For example, if you bought a home in California, and if you bought it in Los Angeles County, they do not generally allow you to same day fund and record. And once the trustee is recorded, you guys are a homeowner. Okay, so that's the process from start to finish. I wanted to switch gears a little bit and talk just for a second about the market update. Many of you know that there's a lot right now going on in the market, a lot of volatility overseas. You got a potential Brexit, which is Great Britain leaving the EU due to unfair trade policies between Germany, which have been that way for a very, very long time. So if they leave the EU, that decision will be tomorrow. If they leave the EU, you'll see rates better from current pricing. If they do not leave the EU, you'll see bond pricing deteriorate and rates worsen a little bit. You know, you guys, pricing's at the best level of the year right now. Rates are fantastic. And I mean, an example is, I mean, you've got Germany that's literally in negative interest rate territory now, where literally you have to pay money to park your money with Germany right now. So all of that fear is what has created so much demand for our mortgage bonds, our mortgage-backed securities, okay? People have been paying their payments on time, okay, for the past 5 years. People have been buying with 20, 30, 40% down. There's been a lot of all-cash buys. People are qualifying with debt-to-income ratios where they can afford these properties, right? I mean, you have to show that not more than half of your income is going out of your pocket each month to be able to qualify for a loan. And you basically have to take a blood sample. I mean, you got to get tax documents and bank statements, and everything has to be verified. So for that reason, when banks lend money and create a mortgage bond, a mortgage asset, a 30-year fixed mortgage bond, that type of bond now is highly desirable by investors. And I say that, I also want to mention, you know, Fannie Mae and Freddie Mac, they're still buying on average $8 billion a week in mortgage bonds. That's $28 billion a month. That sounds a lot like quantitative easing, which they stopped doing 2 years ago, right? They were buying $85 billion a month. Well, they're still quantitative easing. They buy $8 billion a week. So bonds, you guys, mortgage bonds, great commodity, great investment for our government. And for that reason, rates should stay at these levels, at least until employment gets better and until we start to see some more inflation in the economy. Okay? Last thing that I do want to notice, or I mean that I do want to point out though, we are seeing the inflation come back. Quick example is oil bottomed back in mid-February at around $26 a barrel. It's touched over 50 since then. Okay, that's over a 75% swing in the largest traded commodity that filters through everything in the entire planet. Okay, that's inflation right there. So it is around the corner. The Fed is going to get the steam that they need over the next year to raise rates again. But honestly, try not to pay so much attention to all the news. Take a look at what's going around in your own backyard. Realize people are buying property. Real estate is one of the best investments ever right now, and it's mainly because interest rates are still so low, and borrowing costs allow you to retain optimal cash flows on your investments, okay? Interest rates for a 30-year fix on investment property are in the low 4% range right now without paying points. And every 1% rise in interest rate is a 12% reduction in your monthly payment. So you're going to get optimum cash flows by buying in this market right now while rates are still low. If you want to be added on my weekly market update, it's totally free, you guys. Send me an email after the event tonight. I'll have a Samir Hurd, who's my business development person, add you onto the weekly market update, and it goes out every Saturday morning. Marshall Reddick exclusive incentive. I pay $450 out of my own personal commission on each transaction. This goes directly to you as a token of appreciation for using me and my services. We're happy to do it, and it's available on each purchase transaction that you do. Just some Zillow reviews, you guys. You can Google Reed Hazard on Zillow or my business partner Al Rodriguez on Zillow. We are the Rodriguez Hazard team. We've got collectively about 90 reviews, all 5-star on Zillow, mainly purchase reviews. Go on there and check those out if you want to learn more about us. And just here's some things that I really want to kind of talk about. Is, please tell me it's on here. It's not on here. What I was going to go over is the essential part of why reviews are so important. Let me paint a picture for you guys real quick. You've gotten pre-approved, okay? We've gotten all of your documents. You guys are going to go out, now you're going to submit an offer. Let's say that's on a local property here in California, okay? Maybe that offer already has a couple all-cash offers, but they're a little bit lower than maybe the offer that you're going to get because you're going to utilize financing. And for that reason, sellers will definitely take a look at finance offers versus all cash because people that use financing in many cases are willing to go a little bit higher, okay? So are people that are buying a home as a primary versus an investment. Maybe they really want the property, so they'll pay a little bit more for it. Now, what we do here at my branch, we do a fully underwritten approval up front. We have you sign more than just those initial 3 disclosures I talked about earlier. We have you sign a full disclosure packet. It's called a TBD disclosure packet, property to be determined. Okay? You sign your loan disclosures, we get verification of employment, all those things. We submit your loan for a formal underwritten approval. I can then submit and send you a copy of your approval letter, okay, that shows that no prior to approval conditions exist. Okay? We also have what we add with that is called PYT. It's Protect Your Transaction. It's a $10,000 buyer assurance. It's a letter that we can send with your approval letter to the sellers, and we also customize a separate letter that's called the pre-approval offer letter. It's got the property address, it's got the offer price, because you might be approved for $1 million, but if you only want to offer $850,000, why are we going to put $1 million on there? Let's custom tailor it. You'll have the offer price on there, all the details. It'll be signed and date stamped for that day. When Tanya Lorrimore and Marsha Reddick submits an offer with Reed Hazard and CCs me on that offer email to the agent, and me, the branch manager of AmeriFirst, follows up and reiterates that you're fully approved, okay, and that we can close the transaction in 15 days or less, okay, that will look as good as an all-cash offer, you guys, okay. What else we do is I'm always available to contact the listing agent or the sellers myself and explain to them, hey, you guys go online, take a look at my online reviews. I'm a purchase lender. Look at all those reviews. 90% of those are purchase reviews. So things like that really, really mean a lot. Sellers will definitely take into account your lender, right? They want to know who you are if you're getting financing. And again, online reviews are a good thing to be able to point to. How to apply? I like to do loan applications one of 2 ways. You can go on my website, reedhazard.com, click on the Apply Now tab, okay? Click on Residential Loan Application. You can specify the state that you want to apply in, or just put California, and then deciding on where you guys want to go. We'll obviously customize that later on in the process. But once we receive the application, my loan assistants, Jana and Brian, will follow up with you with a specific documentation request. We don't want to request more stuff than we need to, okay? So we're going to specify it based off of your application. And then we're also going to let you know what the best ways for sending the documents to us are. Now the process will take about 24 hours to get you pre-approved the date that we get all of your documents. And then if you want, like if we're going to be buying, let's say in Dallas, Texas, where it's a very, very hot market right now, a lot of all cash out there, we're going to want to do a fully underwritten approval up front where we can close in as fast as 2 weeks. Because that's the best way that the sellers are going to know, like I said, hey, you know what, we got many other all-cash offers, but if you can close this fast and here's the verification of it, then we'll go on ahead and accept your offer. So in some markets, you guys, I will advise if it's better to do the full approval, which takes a little bit longer. But if you just want to get pre-approved the standard way to go out and start shopping, like I said, it'll only take about 24 hours from the date that we get all of your documents. And now the pre-approval letter and the rate cost options will be emailed to you once my branch underwriter has received all your documents and completed that underwrite. So once the underwrite is done, I send you the email. It's got the pre-approval letter on there. And then again, I'm going to have all the options for 20% and 25% down. If it's a primary residence, obviously whatever terms or program that you'd like that we've discussed on our initial phone call, then obviously I'll be having all those options sent over to you. Now, throughout this process, you guys, I'm always available on my cell. It's 949-973-5226. I have 2 personal loan assistants and I have 3 loan processors. The reason why I have that many people working for me and 2 other loan officers is so that I can always be available for you on the phone when you need me. I do not do anything to deal with tax returns or documentation anymore because I need to be available to go over file structure, interest rate, fee. If you need me at 9:30 at night because something's coming up because maybe you lost your job, I need to be available for you. And I urge you to always contact me and call me so that we can talk things out. I'm big on email, but I'm bigger on talking, okay? So know that before you get into the process with Reed Hazard. I'm just going to go over a few of my branches. This is my Southern California branch. It's in San Clemente, California. We're actually right across the street from South and Nix, anybody that ever comes down to the area. It's the old historic City Hall building, top of Del Mar Street. That's my business development gal right there on the far left that I took that picture. And then we recently opened up a Northern California branch as well up in Walnut Creek. We've got a lot of clients now up in Northern California. We've been doing Bay Area seminars with Marshall Reddick since about 2005 up there. So, I mean, again, we just really built a large clientele up there, and we now have a branch up there. So Randy Cohen actually does, for any of you that actually live up in the Bay Area, Randy Cohen will actually be at the How to Buy events this upcoming week. So if you guys want to meet him there in person, he'll be there. And then I fly up to the Bay Area to this branch every third month to do Marshall Reddick seminars and to meet with my loan officers. And thank you so much for listening. This is my baby girl. She's 6 months old actually today, and she wants to thank you all for listening. So that's my dad, and that was a picture that we took on Father's Day a couple days ago. And thank you guys for listening. I hope that you guys choose the right lender. I hope that you take my advice and work with somebody that's available for you. And again, you guys, very, very important. Select somebody that has a good line-of-line reputation, especially when you're buying property, because sellers are always going to take a look at that. Okay? And without further ado, I will pass it on back to Kristen Tabor.
Thank you so much, Reed. Really appreciate it. Quick question before we kind of hop off here, and before I wrap it up. This one comes from Cindy. She says, Kristen, this is a lot of good information and a lot to process. How involved do I actually need to be as a borrower?
It's a really, really good question. So if she's asking how involved you need to be, I mean, we can do everything via email as long as you're willing to send all of your documents and, you know, via Dropbox or PDF or complimentary UPS slip. I mean, Jana, myself, and Brian, we can work with you whatever way is best for you. We can make it pretty hands-off in the sense of not really needing to do a lot of on-the-phone stuff, but I mean, it's definitely a hands-on process in regards to documentation. There's no way to get a loan by just doing an application these days unless you want to put 40% down and utilize private money financing, which Marshall Reddick has got some phenomenal rates for that.
Perfect. Thank you, Reed. There's a couple of other questions here that we'll make sure that we get to. Don't want to keep you guys all night, although I know you're just dying to stay on and listen to us talk a little bit more. Reed, again, I want to thank you so much, everybody. Like Reed said, he is available on his cell anytime. Worked with him on countless transactions, and he's very responsive, like he said, via email, via telephone. So any questions that you guys have, anything that you need, you can contact me. My information's up here. My phone number here in the office to find me directly is 949-885-5162. If you call the office line, my gatekeepers are going to ask you what the call's in regards to, so just let them know you were on tonight's webinar, and they'll set up a time for us to chat. My email address is up here too. Again, you can contact me in either way, cell phone or email. I will get back to you in 24 hours, I promise. And if you have questions tonight that we weren't able to answer on the air, rest assured that we will be in contact with you. Those of you who are looking at property and are ready to get approved with the lender, will make sure you get connected directly with Reed. And once again, my name is Kristen Tabor. I'm an advisor here and a realtor at Marshall Reddick Real Estate. I want to thank you guys all so much for being on tonight's presentation. Reed, thank you again so much. It was very great information, great presentation. And thanks, everybody. Have a great night.